Hey, 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 everybody. We're live. We're live this morning. Let's see what we got to go on today. Yes, yes, yes. So we do know that CPI, I think it's CPI. Yes, just came out. CPI data just came out. FOMC is going to come out soon. Let's take a look at the chart real quick so we can see what's going on. Come on in. Come on in. Wow, we got a lot of people already ready. That was quick. That was quick, I say. Oh man, I want to make sure I'm on the right server. I wonder why this was starting to go so slow. And I see now. I see, said the blind man. I see. Hold on, y'all. Well, it changes servers. There we go. We're back. We are back. Alrighty, so it's bright and early on Wednesday morning. I think I've got my days like kind of mixed up because I thought today was Thursday. Well, yesterday when I was setting up for today, I thought today was Thursday. I thought yesterday was Wednesday. So I had it all set up. My title had to do with post CPI and post FOMC, and it hadn't even happened yet. Good morning, Carmen. How we doing? Hey, Nikki. Hey, Asleen, and hey, Tanya. How we doing? Okay, so I wanted to show you that this is what happened after the CPI data came out. We got a big old green candle. I'm trying to pull it down so I can see the top of the green candle. Come on. Well, maybe it wants to. Oh, there we go. We got a wick. I see a wick at the top. Time frame continuity, though, it does show us still in the green. Of course, we got hour and day, week. So you got to wait till today is like the first hour and all the things. So you, from that standpoint, you got to wait till those things kind of change over. So it is Wednesday morning, June the 12th. It is Wednesday, June the 12th, right? I was sure enough thinking yesterday was Wednesday and today was Thursday, but not the case. So let me get this bigger. We had CPI this morning. Over here, we show that the actual was 0.2%. They thought it was going to be 0.3%. Core CPI month over month. CPI month over month anticipated forecast was 0.1%. It turns out to be 0%. Last time it was 0.3%. You would think this would be green. I guess this is just my lack of knowledge on what these numbers mean. But CPI year over year, thought it would be 3.4%. It's 3.3. Seemed to be very close in line with what was anticipated. So that part's, I think, a good thing. Crude oil is going to come out at 10:30. Crude oil is coming out at 10:30. And at 2 o'clock today is where we get the FOMC stuff is going to come in. FOMC stuff is coming in at 2 o'clock. And then 2:30 is where we have the press conference. So listen, this is the deal. June 12th. If you say it like that, but June the 12th, you have to use your tongue when you say it properly. I want you to, when you're trading today, that you're keeping in mind that these binary events, these big events, don't necessarily lend themselves well to seller moves. But see, the volatility should be up kind of high, so we should be able to get good premiums. But I want you as a seller to really wait, kind of wait and give things a chance to do their thing. Now, if you're operating as a buyer, then you use your buyer strategies. If you're buying options or buying shares, whatever it is you're doing, that's going to be a different set of strategies, right? So I'm talking about what do we do as sellers. But I want you to, let it do and let the dust settle a bit, and then you make your move. Okay. We don't have to rush in when we're sellers. We got till expiration. So what we can do though is capitalize on the high premiums when we're sellers. We like the high premium or the high VIX environment. This high volatility, high VIX, high IV, all those things work for the seller. Okay. The VIX is at 1305. It's up 1.56%. We'll see how that plays itself out today. The fear factor, from what I saw on somebody else's post, is kind of high. So with fear being high, that really means the VIX goes up, and or the VIX is up. That's an indication of fear in the market. Kind of goes with that. Inflation pressures ease in May. The consumer inflation reading will set the tone for a big day in the U.S. economy. Well, Monday was a pretty good trending day. Monday, I didn't watch a lot yesterday. I did the think or swim thing yesterday. I was in some meetings in the morning, so I definitely wasn't watching the market. I was trying to be focused on what I was doing. I was trying to be present where I was. And I did see, though, that there was the think or swim. Finally, after I got myself settled and got back to my house where I could check what was going on, I was able to get my think or swim up and running. But through the day, I kept trying to, a few times I tried to look in, because I had some trades that just in pre-market, they were ready to close. As all this stuff happened, they weren't quite ready after the movement of the day, but all is well. The Fed gets set to show its hand on rate cuts. The political pressure on Powell is heating up. Yeah, I like the fact that Powell he does not like answer to any political thing. He basically his position stands alone, stands apart from that. It doesn't mean that there's not pressures, right? U.S. futures tip higher ahead of CPI, Fed double whammy. We got CPI and the Fed all in one day. Our pre-market numbers here. Well, let me go not from Yahoo. I'm gonna get them from CNBC. Come on, darling. Here we go. Fed meeting and inflation report hit Wednesday, and impact could be huge. Here's what the investors expect from the stock market after the Fed decision. Basically, you got to wait and see what that is. A brief drop in mortgage rates caused a huge surge in demand, but it may be short-lived. European Union announces higher tariffs up to 38% on Chinese EVs. Yeah, I'm gonna stay out of that. I had a comment for that, but I'm keeping it to myself. Yes, I am. Hey, Saida. Hey, girlfriend. What's up? Dow futures are up 0.6%. S&P futures up 0.11%. NASDAQ futures up 0.13%. Oil is green. 10-year bonds are also green. Stock futures tick higher ahead of Fed's rate decision, consumer inflation data. So FOMC are really like the most important things. I won't say most important, but they're of high import for that. But let me see if we look at what's on today. This is a long list. I'll tell you what's here, so y'all don't hurt yourselves, right? The crude oil inventories at 10:30 over here on investing.com. That shows as 3 stars, which I still think is 3 stars. But over on Forex Factory calendar, it doesn't show as 3. It doesn't show as high, but as a red folder. But I think crude oil inventories is of high importance. FOMC press conference. So those things make sense. That those things would be of red and high volatility expected. Okay, high volatility expected. Here we go. So the biggest earning that we had yesterday, come on. The biggest earnings that we had yesterday was last night. We had Oracle. Oracle put in their earnings yesterday. I really wanted to show the chart, and I will show the chart. There's no reason for me to act like I cannot show the chart. But yesterday we had Oracle, we had Casey's, Pet Meds, and Rubric. Vistagen. That's all was yesterday. This morning we had Afamed and Vera Bradley, and then after market today we're going to have Broadcom, which I believe is anticipated, and Dave & Buster's if you're a Dave & Buster's trader. Torrid is here and Oxford, but I'm sure Broadcom is one of the ones that's anticipated. Thursday morning, which is tomorrow morning, I see Lovesac, Wiley, Signet, and Korn Perry. So none of those are. And then Adobe is tomorrow after market closes. Let's look and see what Adam has to say this morning. And he might have put out another tweet since CPI came out. But let's Let's see what he said at 8 o'clock, right? So for days, SPX flagged 53.36 to 66. Yesterday, after a failed breakdown to trigger the long, we broke out. I posted 53.84 is next, likely tomorrow. And we just hit it, size down now before CPI protect your profits, wait for traps. That was, of course, at 8 o'clock before. And he trades futures. So Adam trades futures. So those who he was saying size down to and protect your profits are people who were in the futures market, not those of us in the options market. So he said his plan is 53.90, 54.02, 54.15 plus is up next. 53.57 is the lowest, and it must hold on CPI dips or we sell. It must hold on CPI dips or we sell. So I was going to see here. So the gap between ES and SPX is currently 6 points. The gap between these two is currently 6 points. SPX 500. I'll look at that up here on this screen. If you're trading XSP, we've got 542 on the call side, and we've got 535 on the put side. Watch that 535. You're, of course, going to want to make sure that if it drops down there, you want to make sure that you're protecting yourself on the bottom side. If it drops down into that 53.57 he was talking about there. Hey, Janae, and hey, Nori. Good morning, you all. Okay, so what I see so far, SPX 500 is still moving upwards. Still moving upwards. Okay, I got some charts I want to look at. A couple of our credit spreads are in the place where they are either support or resistance, and they're ready to trigger. So I want to make sure that we look at those. So you may see them as opportunities in the morning. And that's actually what I'm going to do for this coming Thursday, our session this Thursday in my membership. I'm going to talk about basically credit spreads from start to finish, including the charting, including the setting your alerts to let you know when to enter, including entry, including exit. We're going to go through all of it. We're going to add the piece in differently, though, as to when do we enter. We hadn't talked a whole lot about that, and we're going to spend some time talking about that on Thursday. But the chart your way to 100K, the $200 off is still in force, basically. $200 off is still in force. So I'm going to start this. Try to type and talk at the same time. I'm going to start this, the interactive hands-on sessions. I'm going to start during the week of the 17th. I'm going to start them next week. So this week we'll continue to, bring in those who want to join us. And then next week we're going to get started. So if you're jumping on to chart your way to 100K and getting into that, then you can do that. If you're in my community, then there's a link for you to use that will get you a little bit more off if you're one of my members, and that's inside of the Telegram, so you can check that. But basically, we're going to be doing all the charting stuff in our chart your way to 100K, charting basics, support, resistance, trends, gaps. Again, I'm probably going to add broadening formations. That's not really a part of the course, but as I learn more, we all learn more. Candlesticks, indicators, 4 weeks of interactive learning, and an exclusive Telegram that we're going to use to help us to lean in and grow our portfolios, because that's really what we're after here, is making sure we're growing our portfolios in a consistent way. We're trying to grow our portfolios in a consistent way, right? So I'm going to look at SHOP, HPQ, Verizon, and I'm going to take a look at Oracle. I think SHOP, HPQ, Verizon, and Oracle are ready to look at. So if you've got something else you want us to look at in the chat, put it in the chat. If you got some other stock you want us to check into, then put it in the chat. Okay. I'm going here. I'm going to go to, I can start with Oracle. It's already on the screen. But I believe SHOP, HPQ, and Verizon are ready for entry. Okay, so let's look at Verizon, not Verizon, Oracle. I've got all the stocks in my head now. This is Oracle we're looking at. Oracle had earnings last night. And with having earnings, it had a big old green pop. Can y'all see this? Let me put myself back on the screen. A big old green candle last night when they had earnings. But I want you to notice how after coming out of earnings, it has started to pull back, right? So I'm saying all this to say this may give opportunity for some call credit spreads. It's Wednesday. Wednesday is a good day to maybe look at some call credit spreads, but I want you to make sure that because we're at resistance, that gives you a little bit more room. It may give you a little more room to get a little further away, because it could, obviously people could decide, oh, this is a great price. Even though it ran up, people will start selling because they will take their money off the table. That's how that works, right? I had some shares and I want to get my money out of it. Once it popped up there, I'm going to go ahead and get my money off the table. So when I say I'm not talking about me, I'm talking about people in general. Here is our resistance at 175, looks like. I think that's a 175. Nope, it's 125. 125.89. We've got that one, and we've got one right above it. Now, I believe we may be in pre-market. We may be above this. 132 is where we are in pre-market. The price has jumped. Jump around. So let's go back then and see what kind of resistance we have up in that area. So pre-market prices up here. You see this up here in this top, the top right. Okay, I want us to bring down a little bit more. Actually, the pre-market price is right at the top of this wick. So I'm going to put one more line there. Pre-market over here is at 132 and some change. And the top of this wick is 132.77, right? And this is a very high. What's this? What do I have my thing turned on? I feel like I don't. Yep, I don't. Smart money would be telling us that we're up here in the place where we're going to grab some. Oh, this is what be called what the supply zone. This would be supply. I always have to remember that support and supply are in opposite places. That's why I had to look and process it, because supply and demand is not terminology I usually use. I usually use support and resistance. So I have to remember, if I'm going to incorporate those other words, that I have to remember when they are. So right up here is a supply zone, and currently Oracle is up there in this supply zone. We have to see how it comes out of this zone at market opens, but it might provide an opportunity. But there's going to be a big old gap between yesterday's price and today's price. When it opens today, it's going to be a big old gap, and Oracle may want to come down. Now, keep in mind though, Oracle has some information that's been going on with what they put out for AI, their guidance for going forward. So it really may continue to move forward. So you definitely want to watch. You want to watch and see what you watch and see. All right. As far as Oracle goes, we want to make sure that you're checking it out before you just jump in. Fools rush in where others dare to tread. Let's go look at Shopify. We had Shopify on our trades list for the week. This is the daily chart. We had Shopify as a call credit spread on the week. Shopify has a big old gap that it may look how it has come on back up like, well, we're going to get it. But then we end up with this doji, which a doji just means that it's deciding what it wants to do. Let me put this gap onto the chart. Nope, not what I wanted. I need a rectangle. There we go. So we want the close. Yep, to the open, and any wicks or anything that has. Come on back down. I'm right here. There we go. Looks like we got a mixture on the time frame continuity. The day is red, which It's red because pre-market now is showing red. And the week and the month, though, are showing green because all of this green here has definitely got the week and the month going green. So we're looking, this is the gap that it would like to come on back into, I'm sure. Let us back in, baby. Let us back in. So we got it on the call credit spread, like I said, but we're up here at resistance because this would have been based on, are these my lines? Yes, they are. Based on this resistance here in the, what day is this? May the 8th? It's either the 8 or a 6. It's an 8, May the 8th. We're basically hanging out right in there, coming up to bump up against the gap. And of course, the gap will provide resistance, which you can see that it did as well. Well, this is the current, I put the gap here. And then we will, it's got movements throughout the gap that will also have some resistance in here. So we can look to say, if we're at the resistance place, will price turn and come back around? The answer is it very well could. Very well could. So I've got Shopify as, let me make sure I got the numbers. I turned off Thinkorswim because it takes up so much memory and I didn't want it to have too much memory taken up. There you are. I've got Shopify as 65.66. 65.66 as a call credit. The pre-market price is 65 right now. It's like it's up a little bit right into this gap zone. So we're at resistance though. So then you can look here and say, I'll find me another price coming out. Now, this is a good point that we've got lots of green. So you may decide there's a lot of green moving. I'll just go with the trend. Instead of getting a call credit spread, I'll just ride with the other side. And you can do that. So if you wanted to do that, there is some support down in here, and there should be some support right around in here, which is 62.97. There's some in there. You can use that as your go with the put credit spread instead and ride it going on upwards. Right? Good morning, Lisa. But as we enter resistance and turn back, then this is where you can get your trade going back the other way. Now, this is a nice little cup looking thing, and we don't have our handle yet. So maybe we get the cup and then we pull back some for the handle. These are ones that require a little bit of watching per se. So you've got that. Keep that in mind for Shopify. Trade what you're comfortable trading. I'm not giving any investment advice. I'm just saying that it might be something to look at. Okay, let's look at Verizon. We're going to go to Hewlett Packard HPQ next. I'll do that as an iron condor because it's definitely been in a zone. In a zone. Okay, I've got Verizon as a put credit spread. Verizon as a put credit spread. I believe I do. Yep, 39.40 is what it is. What it is. 39.40 is currently at 40.69. So if you're doing 39.40 just below this, because it hit the support and went on. Now, all the lines that I have charted, that I charted over the weekend, are in the sim. That's why those lines aren't here. They're on the sim in my sim account, but there's some. Let's see if we want to go to lines. No, I don't want indicators. See if we want to go to some lines. A line chart. Here we go. It's hard to see the line. Those candles come with an indicator, and the candles stay with the indicator. But this is where support and resistance side is. Okay, let me turn that back to candles. Came down to support. So if we're looking for, now that we're in the $40 range, we can look at 39, 40, 38, something like that. Now that you see that it's potentially on its way back up. Dailies, we got a green. Weekly, we've got a red because we've been coming down for a few days. Again, I want you to always be mindful of where it bounces off of, because that's the whole, if it bounces off of these areas comfortably, we can go ahead, put credit spread at or below our 40, which 40 is going to feel close. So go down further to where you're comfortable. All right. Every time I'm on here, I definitely talk about looking at your probability out of the money, going below that, going below your supports and going above your resistance, and picking strikes that are comfortable for you. Okay. That is Verizon. Now let's go to HPQ. HPQ. Notice on HPQ, we've got, see how it's kind of been in a zone for a minute? It's been right in between this little zone, between this big 2 candle. Whoop, got a line here. We probably could put a line. Let's put some on here. Can put a support right here. We can put a resistance. We can go up either place. We can put it here, or we can bring in closer. This is going to feel uncomfortable. Sometimes it feels uncomfortable, and so we have to go where we're comfortable, right? But we've been in that zone. What's this, 7 days? We've been in this zone for 7 days. What we have on the graphic for Hewlett Packard is 35 on the put credit spread side and 37.5 on the call credit spread side. Okay, that's what we have on the graphic. Everybody who has seen the graphic, which is in all, this part definitely is showed up on all the graphics. We've got call credit spread 37.5 and put credit spread. The good thing about doing these both is now you have an iron condor, and iron condor allows you to pull in premiums on both sides. Put credit spreads 35. You pull in premiums on both sides using that same collateral. It's actually a 50-cent spread. So if you wanted to do it in 50 cent, I have it set on the graphic as 37.5, 38.5, and 34, 35. If you want it like that, then you can do 50 cent if you like. You can definitely do 50 cent. I think I did Shop, HPQ, Verizon, and Oracle. Okay, you could look at doing right in here. Now you see here that the time frame continuity is showing a little more green because we've been going up here. So maybe you check to make sure that you're comfortable with 37.5. We're currently at 36, and I believe it's got like a 0.7 or less. Probably got like a 0.7 plus minus number. Let me look on my phone real quick. Because if I ask Thinkorswim to open up right now, this broadcast will just drag and drag and drag, because basically it pulls so much memory to run it. But let's see what's on the plus minus number. What is this? HPQ, HPQ. PQ. Here we go. The plus minus number is 0.8 actually. So 0.8. So 0.8 up from where we are. 0.8 up from here gives us 37.2, right? Which is below our 37.5. And 0.8 below here puts us at 35.6. So you might even be able to do 35.5 on the bottom side. Okay, but there's room there. If we're looking at the premiums, there's room. Well, maybe I see if you do it with the one spread and you're doing both sides, it's going to be worth your while. It'll be worth your while. I'm a fan of iron condors, as you know. Is there no sound? I don't know. Oh, there wasn't it. The sound was fine. I just wasn't saying anything. Hey, y'all. I see Lorenzo's joined us. Pierre is here. Good morning. Patrick's here. Hey, Patrick. How you doing? All righty. Let's see if we see some more movement with SPX 500. Take us off the daily chart. We'll put us on the 15-minute. See, there's some interesting movements. We got some stocks we're looking at for today. Y'all want to put them in the chat? Put them in the comments. We're on the 15-minute. Why are you getting smaller like that? Come on. All I can do is just offer you my love. Boom, 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 boom. Boom, 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 boom. Okay, this is SPX 500. It's got a little bit of a, not that I know much about fair value gaps, but that's what this is showing right here. It's a fair value gap, but it has decided it was going on after, this is where we were when I mentioned it before, after the CPI data came out, and it is still at the top of that supply zone, hanging out. That's what it's doing. It's hanging out. Oh, GameStop and see now Chipotle might be interesting. I don't know if GameStop is worth charting, to be honest. I feel like GameStop is such a meme thing going on that it defies logic. So that's not a, I won't say it's not, I think it's not chartable. Of course, anything can be charted, but I don't think what you find in the technical analysis holds weight, because I don't think what you have there holds weight because of the fact that it's being moved by a dude who's tweeting. Doesn't that sound familiar? Price being moved by a guy who's tweeting, and all he's tweeting is pictures, like graphics and memes. So this is Chipotle. Chipotle is going to do a 50 for one. I think I saw a 50 for one, 50 to 1 split. Is that what it is, Carmen? I want to say I saw 50 or something like that on an article. It's something now. It's yeah, GameStop is like rolling the dice. Yeah, it's like rolling the dice. And some people are definitely making money. I'm not going to say that people aren't making money, but you need to consider, if you're going to trade GameStop, you need to consider that as what they call a lotto play. Basically means if you're trading it for zero. That says if I put $100 in, I'm ready to walk away from this $100, because it's just there's no really rhyme or reason to it at this point. So it's been around a long time, obviously. It's been around a long time. So. And this dude comes back out of the woodwork. I think E-Trade is getting ready to put him off their platform because of stock manipulation. Hello Kitty or Little Kitty or something he is. They're going to put him off their platform. They're like, no, bro, we don't play with that stock manipulation. That's stock manipulation stuff. Okay, so when I'm looking at Chipotle, this hammer here is an indication that price wants to go up some more. So it could definitely use this as a turnaround right here. 50 split will drop it to around $65. That's going to boost their volume, or it's definitely going to boost their volume, because a lot of people like Chipotle, but at $3,100 a share, many folks ain't buying Chipotle like that. First of all, I don't like Chipotle like that. Their food to me is, but some people are all in. I'm a Moe's fan. I'm all for Moe's. I'm not even a fan of Tier 1 flats, not as much. I do like the fact that they have a whole bunch of like different salsas that you can try, but I'm not a big Tier 1 flats fan. I'm Moe's for me. Welcome to Moe's. Not a fan of. I think what gets me on Chipotle is when I get to the end of the line and I want chips, I don't want you to give me chips in a bag. I want you to do like Moe's does and scoop the chips into my bag. I don't want you to have some pre-weighed, pre-weighed bags of chips. I don't want that. Because what if I need more chips to go with my food? Anyway, I want to talk about how Keith Lee has put them on blast. Even after they did the deal with him, he was like, I'm never going to be influenced by somebody who gives me a deal. I'm going to be honest all the time. So he kind of blasted Chipotle for their practices. But yeah, Saida. Me and Saida live here in the same city. And Moe's is my spot. I'm going to roll into Moe's about once a week. About once a week. My little kids menu, my kids meal works out fine. I get me a kid's quesadilla and a few chips, and that's all I can eat anyway. But it's delicious. Tanya says I suck at dice. Yeah, rolling the dice. I don't even play dice, and that's no. I don't want to feel like my trading is gambling. Sometimes I know people can say it's people who get the dopamine hit, it can feel like gambling. I don't want my trading to feel like gambling, and I feel like when you do something like GameStop, it's gonna feel like that. Like I'm buying $100 worth of scratch offs or something. It is a little different because at least if you're doing with GameStop, you at least can watch what's happening with your money and get in or out. But of course, if you're buying lotto tickets, you don't get to do that. You go to see what's going on. So GameStop may be a little less lotto-ish than lotto tickets. But so if you're doing Chipotle, let me stay with the task at hand. I would probably look at a put credit spread going on up. You got time frame continuity, which is not it's not full time frame continuity, but this hammer makes you think, it makes you look like it wants to go on up some more. So I would probably consider a put credit spread if I was going to do Chipotle for the week. It's got to be a one spread. Chipotle has to be, is it CMG? It has to be, is it a 10 spread, not a one spread, a 10 spread? Okay, what are you doing? It's got to be like a 10 spread. I'm trying to see who's looking at their option chain now and can see. Let me see. I'll go on Robinhood and see if I can see it. CMG. If we're trading trade options and you were doing June 14. No, it's only a 5 spread. Yeah, it's only a 5 spread. 31.40, 31.45. It's only a 5 spread. I was definitely thinking it would be more. But if you were going to sell a put and you were selling a put right here close to at the money, let me put it on. I mean, not sell a put, but if you were going to do like a put credit spread, let me see if I got get a number. If I was going with 70% chance of profit, I would pick that. Okay. Okay, so I just need you to do what I'm trying to do. Oh, it won't let me. I was looking at let's see the strikes I would be looking at if I was doing Chipotle, which I don't know if I would be, but 3110, maybe 3110, 3100. That will put you at a good spot. 3110, 3100. Let me go. I'd like to see what the plus minus number is on Chipotle. My Thinkorswim is tripping again. No shock there. Where's my tablet? I want to be able to see what kind of premiums you would get. Oh, plus minus 55. When is the split? Looks like Carmen said the split was going to happen on 6/26. You probably have to have your shares, which I'm not sure if anybody's rushing in to buy a share or two between now and then, but people might, and people do what they do. People might rush in and buy some shares between now and then. Plus or minus 55. So that means at current price, we're at like 3168. Yeah, so 3100. 3100 puts you in a good spot. That's also what would be called one of those psychological numbers. So it's going to be, not want to drop below that psychological number also. Let me see if we did change it to vertical. On the put side, 31. I need more strikes. Oh, there we go. 3,100, 30.95. Looks like that would pay 230. Wow. You paid $230 for a 5 spread. That's like 50% return on your collateral. Let me make sure I'm seeing this right. Yep, 30.95, 3,100. That's a 5 spread. I can count, right? And it currently shows $230 you take in premiums. Wowee. Current price it shows here is, oh, the bid ask spread is humongous. It's between 31.11 and 31.79 between sell and buy. That's a huge spread. That bid ask spread is 60 points wide. Oh yeah, that's where you run into trouble trying to get in and out potentially. But you know, if you're gonna take in $230 by putting up basically 270, you know, if you receive $230, that means you only have to put your collateral is 270. Are you more of a day trader, weekly, or a monthly trader? Weekly. I'm more of a weekly trader for as far as credit spreads and stuff go. When I'm doing some buying, which is not a whole lot, I may do SPY on a daily basis or triple Q, something. Those may be day trader things, but for the most part, I'm a weekly trader. Yeah, I could see getting out of Chipotle would be difficult because you can pick your strike of what you want it to pay. But if your bid ask spread is 60 points wide and you're asking for something somewhere in the middle, you know, the mark, you just got to hope it hits along the way. Yeah, Jamie says definitely need to recheck these when the market is open. That seems like it's really nice, but I'd have to, like you said, I definitely want to look at it when the market is open for sure. I do agree with that completely. Okay, so I spend a lot of time talking about vertical credit spreads on here, and I want to be sure that you all know that there is a training that goes along with this. So those of you who are like listening to me talk and you're like, well, I'm not really sure if all this stuff you're saying is, you know, how do I make sure I connect the dots? This is what I'm thinking. How do I connect the dots? Because I talk from the standpoint, I talk kind of like to people who already know what's going on. And if you're trying to connect the dots for vertical credit spreads, you may really want to consider getting the vertical credit spreads training, right? If you're one who's looking to do daily expirations like 0 DTE, SPX, those kind of things, you definitely may want to investigate the SPX playbook, which it is a resource that gives you a strategy on how can you trade 0 DTE stocks. Okay, I'm gonna put it, I can type it out, .net, because even though it won't publish on Facebook, it'll publish in the other places. But this $27 playbook is going to walk you through a 0 DTE strategy for using SPX, XSP, RUT, basically using the ones that are cash settled. I don't suggest you use a stock that has shares because you don't want to get assigned, but you can use it on SPX and XSP. Again, it's $27. The E2D membership basically includes this morning call where we hang out right here, and we have weekly training calls. I said this week we're going to spend some more time on credit spreads. That's kind of our bowl of goodies is our credit spreads. We do trade covered calls and cash secure puts, but not so much. Generally, when we're doing kind of the cash secure puts now, we're utilizing PeakBot. Speaking of PeakBot, let me take this up off this screen. Let me remove this off. Speaking of PeakBot, yesterday when Thinkorswim was, doing it swimming and thinking, when it was thinking and swimming, my PeakBot stuff was still running. PeakBot was still able to, because I'm now in, which it kicked in this week, I'm now in the 1 DTE triple Q, which basically it enters one day. The bot is entering one day on an iron condor with triple Q, and then the next day it exits that trade, and then it enters for the subsequent day. So it's doing this basically rinse and repeating. It's rinsing and repeating. I don't know if that book is, I don't think that book is Audible, Lisa, but it's not a very long book. It's not long. So, because it's loaded with stuff you need to be able to see. It's got pictures and things. Anyway, yeah. So I was saying that it's entering every other day, right? So yesterday, while I couldn't get in, I noticed in the morning that my triple Q, the order to close the triple Q had been set by the bot, because the bot enters and exits the trade on its own. It doesn't need my hands to touch it anymore, right? So as I finally got all this, finally got into my Thinkorswim and finally got it all running, and then I saw there that, listen, Peakbot had already closed up the trade from the 10th to the 11th, which was yesterday. It had already closed. It opened on the 10th, closed on the 11th. It had already closed up that trade and had opened up the next one. Even though I could not do a thing with my platform, Peakbot was still connected and still making a way for me. It was still making a way. It was still making a way. So I want to tell you that automated trading was something that, listen, and I think it's great for some people who are really starting to learn credit spreads and really want to do some hands-free trading while you're learning. Peakbot is a great place. Peakbot is an automated bot for sellers. It's an automated bot for the sellers. Okay, so it's got put credit spreads called the wheel. That's kind of where our cash secure puts are. It's doing put credit spreads. The trend spread bot is still in beta testing. It's actually almost ready. We've been beta testing it now for over a month, so I think it's almost ready. And then this the one DTE triple Q and or SPY is also in beta testing, but that beta testing just started, so it's going to be a little bit on that one. But the trend spread bot is the one that does my T triple Q every week. Well, that's what I've been picking. You can pick whatever stock you want, whatever stock's on their watch list, and it'll do the trend spread bot. The good thing about the trend spread bot, I know I say that fast. The trend spread bot is that bot determines puts side. Is it bullish or bearish, basically, and it enters the trades based on what the trend is. It enters the trades based on that. So this is a plus. This is a plus. You can use peakbot.com/E2T, and that will get you 25% off of your first quarter with Peakbot. Okay. Now, if you're looking for, all the pieces and the parts, like I can do this myself, I want to learn some specific strategies, but I kind of want them all in one place, then you've got the option sellers bundle. We've got the option sellers bundle. It includes basic options. If you want to be short selling shares, that's in there. Cash secure puts, covered calls, the vertical spreads. The playbook that I mentioned earlier is also as a part of this combination. And then I've got a masterclass on how do you trade SPX on a daily basis. That is here also. If you want to just grab hold to the option sellers course bundle where everything's in one place, and then you can use what you need along the way. It's a great, great thing. Okay, so let's make sure that we're prepping ourselves for what is to come today. What is to come? I hope you've taken the levels that I gave you for Adam and put those on your chart. I'm going to go to SPX 500 and see where we are now just as the market opens. SPX 500, not 50. But I want to get you off here so that way you're ready and set when the market opens to do whatever it is that you do when the market opens. Yesterday, I posted in our Telegram that the PayPal entry for that put credit spread had triggered, and I couldn't enter, of course, but I did post in the group that it had triggered, and I'm gonna show you real quick when this ends. But looks like not 4 hour. Looks like the SPX 500 is still hovering up here in this. Is hanging out up here in this zone. Come on. Trying to make this big enough. When I'm on the big screen, things are they're bigger. Okay, this is SPX 500. It's not just hovering up here in this zone. We'll see what happens once the market opens. Right, but I wanted to show you PayPal real quick. Let's take us to a shorter time frame. Yesterday, while the day was going, PayPal dropped right down here. Maybe I go to 15 minutes. PayPal dropped right down to support. Now, this is during the day. So it dropped down to support and triggered what I had as a support. Basically, I have an alert on my Thinkorswim that says if PayPal is below blank to blank. I remember what I even put. I can look at my phone. It'll tell me. But if PayPal is below this, then basically send me an alert that says PayPal is basically here. Put credit spread entry. So then you enter here. The same thing happened with Uber on Monday. So what I did was preset it ahead of time. So it triggered, price went up a little bit. It did come back down, which actually is probably here again, and then popped. And so your expectation is that it would go on up some more out of your put credit spread zone. Right? That's your thought. Now we'd have to, you do all your charting, of course. Again, I want to make sure that we're real clear that we look at your charting and you pick the strikes that you're comfortable. But I want to say that PayPal end up having the PayPal strike on the put credit spread side. Is it there? Where is it? Oh, yeah, because PayPal is in the iron condor, was a 65 on the put credit spread side. Where are we at now? 65 and some change. So 65 is the strike. But if it was down there near the support, then you could go down a couple more strikes. You go down a couple more again, but you're coming out of the zone. The good point is that as it's coming out of that zone, you're going to be able to potentially exit your trade quicker because it's going to move away from the price you want it to move away from. It's going to move away faster. That's the premise there. When it comes out of support, then you'll keep moving and you can go ahead and close your trade in a shorter period of time. Okay, I'm trying to get us to there we are. All right, our trader declaration. I declare I'm a great trader. I declare I'm a successful trader. I declare I'm a focused trader. I declare my wins exceed my losses. My accounts grow more and more each week. I am a wise and knowledgeable trader. I always make smart and lucrative decisions for my portfolios. I declare I'm a level-headed trader who does not trade my emotions. Lord, it's you who gives us the power to get wealth. You teach our hands to war with the purpose of establishing your kingdom. Help us today to trade wisely and strategically in order to fulfill this purpose. Give us more than enough so we can have what we need and enough to be a blessing to others. Remember all the time that we are trading for trading for money. We're not trading just to say we're traders. Right? Everybody should have a goal for your trade, whether that is, I want to trade enough to replace my income. I want to trade enough to be my part-time job. I want to trade enough to pay my car payment. I want to trade enough to pay my dog's vet bills. I want to trade enough to help the person down the road buy groceries. Whatever your thing is, there needs to be a purpose for your trading. That way, when the money comes in, it's already got a job. That way the money can come because it's got a job. It's got a job to do. I need to come over there to her because she's got a job for me to do. Okay, so that's what we're doing here. You're trading for a purpose, right? So keep that in mind as you continue to trade. I'm going to wrap us up, and I want you to know that we do 2 things each day. We do 2 things, maybe 3, but definitely 2 things. We stay green. We get this money. Okay, I want you to have a great green day, and I will see you in the market. Bye, everyone. Bye-bye. Bye-bye. Let me stop the stream. Goodbye, everybody. You're welcome. You are welcome. Have a profitable trading day. Absolutely.